At the end of the month, the ASX monopoly will be broken up and the bastion of the free market will finally be exposed to competition. While the new player, Chi-X, will start off as a minnow, trading in just 6 stocks, it is a global consortium backed by financial giants such as Nomura, Goldman Sachs and Bank of America. But just what changes will it bring to share trading? Neil Woolridge reports.
Australia's stock markets have come a long way from the days of chalkies and rowdy trading floors. But chalk gave way to keystrokes a long time ago, and now the 2-decades-old national exchange turns over $5 or $6 billion in stocks a day. This month, the market is set for more upheaval, with a new upstart set to break the Australian Securities Exchange's monopoly on trading.
Everyone is very keen and anxious to see competition. We think it's long overdue in the Australian marketplace, and that we'll see competition as it's already done. It will drive down prices, it'll improve service levels and generally be healthy for the Australian market.
This week, Chi-X won approval to make a soft launch into the Australian market at the end of the month. Peter Fowler says Chi-X will initially trade just 2 ETFs and shares in 6 companies over 2 days to make sure its systems work. But the Chi-X roster will include big globally focused names like BHP Billiton, QBE and CSL.
Obviously, the broker community here is hurting. There's a drop-off in turnover. So we'd like to see a much healthier market, and I think that would be good all round.
It's very much a wait and see in the Aussie marketplace on how it actually will develop. At the moment they are the only guys who have put up their hands to essentially compete with the ASX at this stage. In other regions around the world there are more players than just purely one competitor in Chi-X.
Chi-X won't say what targets it's set for Australia, but the firm has captured 20% of the market in Europe and 9% in Canada.
Our expectations are that we're going to follow in their footsteps, and we're looking to good success here in due course. We don't think it's going to come overnight. It's going to be a progressive thing.
Financials analyst Russell Gill says the impact on the local bourse will be muted because trading revenue only makes up 6 or 7% of the ASX's income. And investors will have to go through one of the 22 participating brokers to use the Chi-X platform. But the new entrant is already having an impact on pricing, where Chi-X is undercutting the ASX by around 40%.
The ASX has already dropped pricing substantially from last year. Across the normal trading period, they've dropped their prices by 50% compared to last year. You would expect in this marketplace, depending on where market share will necessarily start flowing, that competition on pricing will certainly be a new dynamic in the Australian marketplace.
For the average size trade on the ASX, of about $5,000, the exchange fee is 15 cents. And Chi-X is coming into the market and offering an exchange fee of about 9 cents. So these transaction cost savings are tiny.
The ASX says it's ready for market competition and points to a number of technological upgrades it's made, along with reducing transaction fees. The new entrant will also create challenges for the market regulator, the Australian Securities and Investments Commission.
I wouldn't say more difficult, Neil. It is certainly more complex, but the complex part has been the IT build. What we've got is a smart system that really has been focused on the ASX trading platform, and we now have a system that will meld the Chi-X trading into that.
However, ASIC doesn't think the new trading platform will open the door for increased market manipulation.
I wouldn't think necessarily that follows. Perhaps there's more opportunity for others to do so, but it doesn't necessarily follow that there are more people engaging in that sort of trading, certainly insider trading. Market manipulation is something that we have to be very aware and alert to.
There are some dangers. Do I believe that they'll be significant? Probably not. I think that the regulator is well prepared and has the appropriate infrastructure in place to safeguard the marketplace.
But Chi-X will open the door to arbitrage opportunities, with shares trading at different prices from time to time on the two platforms. That's likely to see increased volumes and a rare opportunity these days for a guaranteed quick buck.